Hello, and welcome back to my channel IQD to USD Embracing Financial Flexibility Amid Economic Shifts. Introduction. The global financial landscape is constantly evolving, and recent events highlight the importance of being adaptable. Over the weekend, redemption teams expected to be called in for work but did not receive official notifications. However, sources suggest they should remain prepared for weekend assignments moving forward. Meanwhile, the financial sector has witnessed a growing interest from the United States in investing in Iraq. On Sunday, Iraq's central bank governor, Ali al-Alak, met with Steve Lutz, vice president of the American Chamber of Commerce, to discuss enhancing banking and economic ties between the two nations. The conversation underscored the eagerness of American financial institutions to establish a stronger presence in Iraq. Al-Alak assured that the Iraqi central bank would facilitate the necessary support to help these institutions gain a foothold in the Iraqi market. Against this backdrop of economic transformation, investors are faced with critical decisions about managing their wealth. Should they opt for rigid, structured investment strategies or embrace flexible approaches that allow for adaptability? This article explores the benefits of financial flexibility, particularly in the current economic climate, and how individuals can position themselves for long-term financial success. Choosing the right investment strategy. How one manages investments can significantly impact financial growth. Imagine two investment strategies. One where funds are locked into a structured system with limited control, and another that provides the flexibility to navigate emerging opportunities. Which would you prefer? Having a flexible investment approach, comparable to floating on open waters, offers greater potential for returns compared to locking funds into a rigid structure, akin to being confined in a basket. This choice matters because it not only affects financial growth, but also provides peace of mind for investors. The basket approach. Stability with limited growth. A fixed investment strategy, often referred to as the basket approach, involves placing funds into predetermined structures such as mutual funds, fixed-rate accounts, or long-term bonds. While this method provides stability, it comes with trade-offs, including limited control over returns. Funds locked into a structured investment may not adapt well to inflation or unexpected financial needs. Investors must wait for a predefined maturity period, making it challenging to seize new opportunities in a rapidly changing market. This lack of flexibility can result in lower returns compared to a more dynamic investment strategy. The floating approach, maximizing financial flexibility. On the other hand, a flexible investment strategy allows for greater adaptability. Diversifying across various assets, including stocks, bonds, real estate, and even cryptocurrencies, enables investors to respond to market fluctuations. For example, in the foreign exchange market, some currencies have demonstrated returns far exceeding a 1-to-1 ratio. Investors who allocate funds dynamically can capitalize on significant growth opportunities rather than being restricted to predetermined gains. Moreover, flexible investments allow investors to react swiftly to underperforming assets. If a particular investment is not yielding desirable results, funds can be reallocated to higher-performing opportunities. This continuous cycle of reassessment fosters long-term financial growth instead of stagnation. The psychological and emotional benefits of flexibility. Beyond financial returns, a floating investment strategy offers psychological advantages. Investors who actively manage their portfolios often feel more empowered and engaged in their financial future. Rather than passively waiting for returns, they can make strategic moves to optimize profits. The ability to control investment decisions can reduce stress and enhance confidence. When investors know they have the flexibility to adjust their approach based on market conditions, they are less likely to panic during economic downturns. This proactive mindset contributes to better financial outcomes over time. How to implement a floating investment strategy. For those interested in adopting a flexible investment approach, here are key steps to get started. 1. Research investment options. Explore different financial instruments, including stocks, exchange-traded funds, ETFs, real estate, and diversified assets. Choose investment platforms that allow for real-time monitoring and fee-free trading. 2. Build a balanced portfolio. Spreading investments across various asset classes mitigates risk. If one sector underperforms, others can compensate for potential losses. A well-diversified portfolio enhances overall financial stability. 3. Monitor and adjust regularly. Financial markets are constantly evolving. Stay informed about market trends, analyze investment performance, and adjust strategies accordingly. Active portfolio management ensures long-term growth and resilience. Trump's announcement: restrictions on U.S. dollar usage in Iraq. In a surprising policy shift, former U.S. President Donald Trump announced that Iraq would only be permitted to use the U.S. dollar for medical-related expenses, such as purchasing medicine and medical equipment. All other transactions, including business dealings and stock market activities, must be conducted in Iraqi dinars. This decision has far-reaching implications. Iraqi citizens and businesses that have traditionally relied on the dollar must now transition to using the local currency. The impact of this policy change will be felt across various sectors. Effects on daily life and business. 1. Consumer impact. Everyday shoppers accustomed to using U.S. dollars will need to adapt to transacting in dinars. This shift may cause short-term confusion and economic adjustments. 2. Business adaptation. Many Iraqi businesses engage with international suppliers who prefer payments in U.S. dollars. The restriction could lead to supply chain disruptions and increased costs for imported goods. 3. Stock market consequences. The Iraqi Stock Exchange, which has long operated using the U.S. dollar, will need to transition its trading mechanisms. This could discourage foreign investors who rely on dollar-based transactions. 4. Travel limitations. While travelers may still exchange limited amounts of U.S. dollars for international trips, restrictions could make foreign travel and tuition payments more challenging. Iraqi government response and economic implications. This policy shift raises several critical questions. How will the Iraqi government manage the transition? What measures will be implemented to stabilize the economy? How will businesses and consumers adapt to the new financial environment? Public reaction is likely to be mixed. Some citizens may worry about inflation, limited access to foreign currencies, and potential increases in black market trading. On the other hand, some may view this move as a step toward economic self-reliance, encouraging national financial growth. Diplomatic relations between Iraq and the U.S. could also be affected. If businesses struggle under these regulations, Iraqi officials may push back against the restrictions. Potential silver linings: economic growth and financial independence. While the transition to using the Iraqi dinar exclusively may create short-term instability, it could also lead to long-term benefits. A stronger reliance on the national currency may foster economic growth and financial independence. If the Iraqi government implements sound monetary policies, this shift could reduce dependency on the U.S. dollar and strengthen the local economy. Uncertainty and future possibilities. With Iraq historically dependent on the U.S. dollar, this sudden policy change introduces uncertainty. Key questions remain. Will inflation rise as a result of this transition? Could a black market for currency exchange emerge? How will the Iraqi government address concerns from businesses and citizens? The answers to these questions will shape Iraq's financial landscape in the coming months. As news of this decision spreads across social media and global financial platforms, public perception and political reactions will play a significant role in determining the policy's long-term impact. Final thoughts. Seizing financial opportunities amid change. In light of these financial changes, investors must consider how to protect and grow their wealth. Moving away from rigid financial structures and embracing flexible investment options can provide a strategic advantage. The ability to adapt to market fluctuations, diversify investments, and actively manage portfolios offers significant benefits. Now more than ever, it's essential to explore opportunities that provide both security and growth potential. Are you ready to break free from restrictive investment strategies and embrace financial flexibility? By taking proactive steps today, you can navigate these economic shifts with confidence and position yourself for long-term success.